Not too long ago, I got very upset at some people saying that revenue growth in microcap stocks was overrated. In fact, I made an entire video titled Why Revenue Growth is Not Overrated, Finding 10x Stocks. And that was based on data from Ryan Telford, who says that of nearly half of the 10x stocks in the past 10 years, the main driver was sales growth. The average was revenue growth was around 45%, earnings growth was around 29%, and valuation growth about 23%. So to get a true 10x stock, you kind of need all three, with the importance being on sales growth. And of course, finding that 10x stock is everybody's dream because it is life-changing money. Hammond Power Solutions here up 15,000%. Even a polarizing stock like Tesla changed lives, right? Going from $1.96, gaining 14,000% all time, and it was a lot higher during COVID, right? Tesla made millionaires. In fact, looking at this table from Ryan Telford and talking about life-changing money, if you had invested $10,000 in these stocks, the lowest returning stock on this table would produce $125,000 in returns. The highest one, $842,000 from a $10,000 investment. And that is excluding Nvidia, with $10,000 producing over $2 million. I mean, unfortunately, social media gives people the false narrative that finding the next 10x stock is easy. I mean, these people are looking at finding the next 100x stock. Most of these stocks are probably down 100x, not up 100x, right? A lot of pump and dumps. A lot of people looking to put your money into their pocket with all these promises of turning $1,000 into $1 million. So look, if it's not that easy to find the next 10x stock, never mind the next 100x stock, how do you do it? How do you find a 10x stock in the microcap space? Well, I'm going to start by saying that I'm not a financial advisor. I'm definitely not your financial advisor, and I don't give buy, sell, or hold alerts on this channel. And this is just my opinion. This is how I invest, not how to invest. But again, I find myself looking at this very useful data from Ryan Telford and asking some questions, just like he does. Right here, the question is, how well can analysts find 10-bagger stocks? The data says not very well. Ryan here is looking at earnings per share estimates, looking at the dispersion, meaning the difference between the high estimated EPS value and the low estimated EPS value. Basically, the higher the value, the more varied the opinions are, meaning the analysts can't agree. If you look at the S&P 500, there's not much variation. Most analysts are in this nice and tight, tidy 10% kind of bracket. If you look at most 10x stocks, it's extremely varied, with 30% of 10x stocks having 2 times that number, and 20% had negative earnings per share estimates. So if we look at the data here, at least half or more of the analysts had no idea a stock was going to 10x, and we can't rely on analysts to tell us what the next 10x stock is. And trying to predict the next 10x stock using numbers is a hugely valuable tool. However, even that is not always 100%. Giving an example here of Taylor Devices, where as an analytic investor, if your two most important things to look at were earnings growth and multiple expansion, you would not have gotten Taylor Devices because it actually contracted in multiple expansion, but it did have significant earnings growth. And I did want to point out here, if you look at dividend yield, all of these 10x stocks, almost none. 1% is the highest. Now, if you're trying to find 10x stocks using industry sectors, a little bit better here, right? 54% of 10x stocks from the last 10 years are in the tech sector, with second place being only 15% from industrials. So again, nothing is 100%, but if you start adding this up, right? Okay, more tech stocks, 10x, at least in the past decade. The problem with investing is it's good to know what's happened in the past decade. What's happening in the next decade is what I want to know, right? And while the past few points are very important, don't rely on analysts, nothing is ever 100%, and there's always outliers from the normal. The next few points here are the meat and potatoes of what I'm looking for, because Ryan starts talking about cash. If you're still convinced that free cash flow doesn't matter, ask some 10-bagger stocks. 85% of 10x stocks have increased their forward cash flow margin today compared to their low. Now that's interesting to dissect. Let's go take take a look. Because what Ryan is talking about here and giving us in data is that there's no actual free cash flow margin percentage that we're looking for. Everything from 32.5% to 6% to -3%, 14%, it's all over the place. You can't say that one free cash flow number is the ideal for a 10x stock. What he is saying in free cash flow margin is that it increases over time. So the increase, the change, the trend, the improvement of free cash flow margin over the years is something that is driving 10x returns in stocks. Again, looking at another list of data, we've got two of the more significant returns here of Nvidia of 26,000%, Broadcom 2,300%, free cash flow margin change of 32.6 and 29.4. So huge, although again, nothing is ever 100%. There are always outliers with a few of these companies being in the negative. So if cash is a great indicator of a 10x stock, but not 100%, what about ROIC, return on invested capital? High return on invested capital has little predictive power of future returns. However, the trend in return on invested capital can be more predictive. More than 60% of 10 baggers in the last 10 years show improving ROIC numbers. Again, similar to free cash flow, there's no specific number to look at, with ROIC numbers being all over the place, 151%, 71%, 6%, 3%. There's no set number that you can look at and just say, yep, this is a 10x stock. However, what Ryan is saying consistently is, again, the trend, the improvement of return on invested capital from start to finish is a good indicator of a 10x stock. Although again, never 100%, because like Ryan said, 85% of 10x stocks had improvement to free cash flow and 60% of 10x stocks had improvement to ROIC. So we're starting to get closer to a final answer here. Again, a positive ROIC trend appears to be a signal for some of these 10x stocks, but like most factors, it's rarely 100% of the time. 60% is good. So how can you find the next 10x stock according to Ryan? Well, he gives some hints talking about trying to figure out which industry sector will produce the next 10 baggers in the next decade. Will it be tech again or something else? And then, of course, he's talking about, microcap stocks with high sales growth, just like in that last video, plus now improving ROIC numbers. And I would suggest he would also add in improving free cash flow or operating cash might be another significant factor. Now, for me, how would I look for the next 10x stock? I think one of the main points from this entire video, one thing that I learned as a takeaway, is to be careful of looking at microcap stocks as a snapshot in time. There's no snapshot number. You can't look and say, I want 10% free cash flow and I want 50% ROIC. While looking at company earnings quarter after quarter and annual earnings is important to get those snapshots in time, the point of doing that is to make sure you gather that data, add it all up, and put it in a format where you can determine trends. In what direction is that data moving? In what direction are those numbers moving? Is this company trending towards improvement or not? So while there's value in doing this, taking that snapshot in time to figure out where a company is at today, I am very much an investor that tries to add up all those snapshots to figure out where a company is going to be tomorrow. Do not forget to add this slide to your bucket of things to look at. It's not just a snapshot of where the numbers are today, what the conversion is today, what the margins are today. Specifically trying to predict the future is trying to predict trends. Is the revenue trending up? Are the earnings trending up? Is the cash trending up? Is the ROIC trending up? Is the valuation trending up? And yes, I would rather buy a company where their valuation is trending up and not trending down where they're cheaper every day, right? We're investing in good companies that are improving. And this is not done as a snapshot in time. I can't just look at a stock in 2 hours and make a decision. Investing is analyzing historical trends and predicting future ones. And that always keeps me coming back with investing. This is one of my favorite quotes. It's really weird that it comes from a sports figure, Wayne Gretzky, saying that I skate to where the puck is going to be, not where it has been. If only we can do that with stocks, right? Hello, 10 years ago, Nvidia. Thanks for your time. You've been watching Common Sense Investing. For more content, don't forget to subscribe to my channel. I also have a Patreon for 100% of my research. I hope to see you again soon.